morning and welcome to Business Morning. I'm Chimeze Obi Iwago.
Great to have you. I'm Ladi Williams. Let's take a look at what's in the news. Oil prices edge higher this morning, supported by tensions in the Middle East, but failed to regain most of the previous day's losses after a surprise build in crude stockpiles in the United States, the world's top oil consumer. Brent crude oil futures rose 14 cents to $70.52 a barrel, while U.S. West Texas Intermediate crude futures increased by 18 cents to $68.33 a barrel. Both benchmarks fell by more than $2 a barrel on Wednesday.
Israeli aircraft struck what its military said were rocket launch sites in South Lebanon early on Thursday in response to earlier projectile fire towards Israel from Lebanese territory, helping check gains a rise in locally transmitted COVID-19 cases in China, the world's second largest oil consumer that has prompted restrictions in some cities and cancellation of flights is threatening demand.
Meanwhile, the Federal Executive Council approved a $1.484 billion contract for rehabilitation of the Warri and Kaduna refineries. Minister of State for Petroleum, Timipre Silva, told State House correspondents after the Federal Executive Council meeting, chaired by the Vice President, Professor Yemi Oshibajo, that the completion of the rehabilitation of both refineries will be carried out in 3 phases of 21, 23, and 33 months.
According to him, work has already commenced in the Port Harcourt refinery with 15% of the contract sum already paid to the contractor.
The combined total sum of $1.484 billion. $1.484 billion. 897,678,800 US dollars for Warri refineries and 586,902,256 US dollars for Kaduna refineries. The rehabilitation of Warri and Kaduna refineries is going to be in 3 phases. The completion of the rehabilitation is going to be in 3 phases. First phase is within 21 months. Phase 1 will be completed. In 23 months, phase 2 will be completed. And in 33 months, the full rehabilitation will be completed. Work has already commenced in Port Harcourt. Already the first 15% of the contract sum has been paid to the contractor, and the contractor has fully mobilized to site. We also discussed in council the need for us to give periodic updates. Soon we'll be going to inspect the work in the Port Harcourt refinery, and you will all be with us on that visit.
And the Federal Executive Council also approved the transaction advisors to facilitate the issuance of Eurobonds in the international capital market. Decisions include the international bookrunner, JP Morgan, and Citigroup Global Markets Limited, joint lead managers, Standard Chartered Bank and Goldman Sachs, Nigerian bookrunner, Chapel Hill Denham Advisory Services Limited, and financial advisors, FSDH Merchant Bank Limited, international legal advisor, White & Case LLP, and the Nigerian legal advisor, Bawo and Igodalo.
The transaction advisors were selected from an open competitive bidding process in line with the Public Procurement Act 2007 as amended. Now, the DMO will speed up Eurobonds issuance activities based on the transaction advisors' approval.
Meanwhile, the International Monetary Fund this week approved a new general allocation of special drawing rights equivalent to $650 billion, the largest in the IMF's history. The allocation, which becomes effective on August 23rd, was in an effort to boost global liquidity amid COVID-19 pandemic.
And out of the sum, Nigeria is expected to get about $3.35 billion. Now, what would this mean for Nigeria's reserves? We will have this conversation with Akintoye Oyelaku, investment analyst at Cardinal Asset Management. Next, this is Business Morning.
And Akintoye Oyelaku, investment analyst at Cardinal Asset Management, joins us now. Good morning. Great to have you.
Thanks for having me.
Yeah, so let's begin by, understanding what this special drawing rights is all about.
All right. The special drawing rights was created in 1969 by the International Monetary Fund, and the purpose of it is to serve as international reserves assets, so that whenever there is a global crisis in which member countries are affected, the governors could approve this SDR to be distributed among the vulnerable member countries of the IMF. We saw this distribution in 2008, 2009 global financial crisis. The IMF approved the distribution to member countries which suffered due to the emergence of the global financial crisis in 2009. And now we are seeing the same pattern. The IMF is approving $650 billion to vulnerable member countries to improve FX liquidity for them due to the emergence of COVID-19 and the negative impact thereof. So the SDR is valid based on a basket of currencies, which includes the USD, British pounds, euro, Chinese renminbi, and Japanese yen.
Now, according to the projections by the IMF and World Bank, the global economy is already on a recovery path with positive growth trajectories. How do we now justify this massive bailout in the light of these projections?
All right. So basically, one of the things that has resulted from the emergence of COVID-19 has been that we saw a fall in oil price. We saw capital flight as foreign investors were trying to play a risk-off strategy due to the macro conditions that were stoked by COVID-19 pandemic. So what this is going to do is that it's going to help to boost the FX liquidity for most vulnerable or poor nations who are members of the IMF. For instance, you'll notice that in 2020, Nigeria suffered a lot of FX constraints due to the fact that foreign investors were not bringing in their investment into the country due to how tight the FX was in terms of CBN was very strict about FX supply. So a lot of them were unable to get out of the country, and that is still affecting the rate at which they are coming in at this point in time due to the concerns about FX. So this is definitely going to have a positive impact on Nigeria, especially if you look at it in the context of the recent decision that was made by the central bank to stop FX sales to BDCs. So the increase in FX is going to help the CBN to be able to meet the demands of those that need the FX, at least in the near term.
All right, so out of the approved $650 billion in SDR, Nigeria is expected to get $3.35 billion. With this development, do you expect Nigeria to put its plans to incur further foreign loans on hold, and will accessing this SDR not further compound, our debt burden? Is this really free money?
Well, it is free money in the sense that the cost is zero. At least there is no interest. However, the capital, you still have to repay back the capital, So definitely, we saw the approval of $6.4 billion Eurobond. We are still expecting additional external borrowings, towards the remaining part of the year. So we are going to receive more borrowing. So this is not going to reduce the rate of borrowing for external reserve. However, it's going to have a positive impact in terms of borrowing costs. Since it is at a zero cost, it's going to reduce our borrowing cost. We don't have to raise that additional 3.3 billion at any cost.
Now, IMF is usually particular about conditionalities such as foreign exchange, policy reforms, subsidy removal, and so on. Do you foresee these conditionalities being brought up by the IMF, particularly for Nigeria?
Well, earlier this year, we saw the convergence of the official window and the early window. We saw the CBN adopt the early window as the official exchange rate for Nigeria. So looking at this factor, we are not going to likely see the IMF, coming to also bring other conditions into the SDR, which they are intending to give to Nigeria. And already by August 23rd, between August 23rd and August 24th, Nigeria should be receiving
that SDR. So there's likely not going to be additional conditionalities by the IMF to Nigeria to get this SDR.
All right, still considering the potential impact of the approved SDR by the IMF, do you consider it being sufficient for, Nigeria to be able to improve its capital importation position, especially given the slump in aggregate capital importation in the second quarter of 2021?
Now, so basically, one of the factors that resulted into that sharp contraction that we saw in capital importation was just because of FX illiquidity, although there are many other factors. However, looking at the fact that the ability to supply FX, will be improved, this could, drive positive sentiment for foreign investors, especially foreign portfolio investors. We may be looking at, coming into the markets for the many part of the year with this news that we are hearing.
Now, taking a look at the capital importation data released by the NBS, aggregate capital imported into the country fell by 32.4%. I mean, that's quite a huge word compared to what we had in the second quarter of 2020. This is such a concern, even though we have exited recession and the country looks to be recovering, considering it from the aspect of a fourth quarter 2020 and the first quarter 2021 GDP growth. So how do you think the sentiment of investors can be renewed to drive the recovery in capital importation?
All right, so looking at the structure of the capital importation data, we note that, since maybe in between the last 5 to 10 years now, we have seen that foreign portfolio investment has dominated the capital importation numbers. Even despite the effect of COVID-19, despite the slump that we saw in capital importation, we still saw that foreign portfolio investment grew significantly, with other investment and also foreign direct investment declining. So what Nigeria needs to achieve sustainable growth will be the foreign direct investment. And looking at the current macro conditions, it will be difficult for us to be able to achieve, a pre-COVID level FDI, even though even before COVID-19, we still had a weak FDI compared to the FPI. In order for us to attract more foreign direct investment into the country, there's a need for a lot of restructuring of a lot of things. For instance, when you look at the problem of insecurity in a country where even the citizens do not feel safe, a foreign investors will likely even consider himself to even be in a worse position compared to even a citizen that is not even feeling safe in his own country. So we need to take care of the problem of insecurity to make the country, attractive for foreign investors. Also, infrastructure gap. Nigeria has a very huge infrastructure gap, and there's a need to work towards, creating these infrastructures like, a stable power supply, good transport system, and the likes, in order to, make Nigeria more attractive and competitive across the West African landscape. So when you also look at in the aspect of diversification, Nigeria is largely focused to the oil sector, despite the oil sector contributing only about 8% to the country's GDP. Around 90% of our export earning comes from oil, which speaks a lot to our ability to diversify, from oil revenue. So there's a need to diversify the oil base by strengthening the non-oil sector so that we can drive more export from this sector in case whenever we have a kind of COVID-19 disruption or a global financial crisis, we'll still be able to survive from the effects we are able to get from other sectors, like what we saw in COVID-19 era, when we saw a slump in oil demand. This greatly affected the ability of the country to generate FX. So we need to diversify our FX base. Also, when it comes to policies, Nigeria needs to look at making policies not only from the aspect of what revenue are we going to be getting from these policies we are making. Rather, we need to look at it in terms of what will be the long-term impact for the economy. How does it support the economy? How does it reduce unemployment? How does it support strong growth for the country? We need to make policies that are more competitive when we compare to our close countries, our neighbors. We need to make Nigeria very much attractive in all these aspects that I've mentioned. If we can resolve those issues, then we will likely see Nigeria attracting very significant foreign direct investment going forward.
All right, so earlier in July, the OPEC Plus cartel agreed on raising the oil supply by 0.4 million barrels per day, starting from August. However, despite the increasing rate of vaccination, concerns over the spread of the Delta variant still loom here and has begun to drive panic in the oil market as the oil price fell for 3 consecutive days. Now, what is your take on the new concerns in terms of, oil market stability in the near term?
Yeah, so when we look at the oil market now, we have seen that oil prices have, ticked higher to a significant high compared to the time when we had the emergence of COVID-19. And what has really been driving the oil market recovery has been the rate of COVID-19 vaccination, which has been very aggressive. As of July, we had around 4.1 billion vaccination already completed around the world. Despite the fact that it was still uneven in terms of the rate of vaccination, we still have some poor countries not being able to afford that. So in all, we have seen that the rate of vaccination has led to a reopening of businesses and economic activities, which has driven the improvement for demand, demand for the oil commodity. This has been what has driven up the prices. However, with the surge in the Delta variant, we might see economies going back to lockdown. If this situation is not well controlled, if this vaccination is not completed in time, and across the country, across the world as it should be. So this might affect the recovery that we have seen in the oil market. And if consuming countries start to put restrictive measures such as shutting down their economies, restricting travels, this will affect demand for oil, and we can see that we are going to likely see that oil price will be falling again due to the fact that we are seeing a surge in COVID-19 cases. But nonetheless, we still believe that oil price will still remain relatively stronger than what we had last year. However, they still need to take precaution to ensure that the recovery in the oil sector continues in the momentum that we are seeing to date.
All right, even for now, we are beginning to see some kind of tension in the Middle East that has seen the oil price tick up a little bit this morning. We'll discuss that further on our commodities market segment next. Thank you very much, Akintoye, for your time. We do appreciate it. And after the break, commodities market update is next.
And on commodities market updates, we're being joined by Juliet Adenuga, head of Treasury at Financial Derivatives Company. Great to have you on the program. Good morning.
Good morning. Thank you for having me.
Good morning. So, the Federal Executive Council has just approved the NNPC acquisition of a 20% stake in Dangote Refineries. In June, when NNPC first made this known, there were concerns and questions about, okay, the NNPC is looking at buying a stake in a private...
Why should they even be doing that?
Refinery when we still have, our refineries just lying fallow.
Okay,
What do you think?
I think it's all shades of good to a large extent to Nigeria that the federal government is taking a 20% stake in the Dangote refinery because it's a way of securing our energy supply. You know that Dangote is a private entrepreneur. And a private entrepreneur is purely a profit-making venture. So the hand of the government in it, to a large extent, is going to ensure that security of energy to a large extent. There should be supply agreements. What if he produces and decides to just export? There is, the local need that should be met, and it should impact on the price of, petroleum products first before we talk of exporting. So I think it's a good one for the government. It's like a kind of corporate governance coming to play. It should ensure transparency in the operation of, these refineries. That is the ideal thing. And on the other hand, also, it's really very good if government takes, this stake. It's going to do a lot of good to the stock market. It will deepen the market. At the same time, the oil share index will be, impacted positively, and which, it's very good for investors. Maybe that's also one way to encourage the lost foreign private investments, that we're still trying to, offset. So I think it's a good one for the nation, that the government is stepping in. We are ensured that at least there will be an agreement. There's a hand of government to ensure that the private entrepreneurs don't take full advantage of Nigeria and the situation. So there will be a kind of control in the whole thing.
Now, Dangote Refinery, of course, is expected to come on stream. That's next year. So, I mean, Nigeria has been having issues of petrol, in terms of petrol prices and all. How much of impact do you think Dangote Refinery coming on board is going to have in terms of petrol prices?
Yes, it's supposed to have a huge impact because, like there was a time we discussed here earlier on, some months ago, it's one of the largest capacity single train refinery. It's supposed to produce 650,000, liters a day. That's a lot. So we hope and we expect that as, commissioning is supposed to be in January 2022. And as long as, production begins to take place and refining of this crude begins to take place, at least it should impact on the local market immediately, because before you think of going outside, you should first meet your own domestic need.
And even now that we're having the rehabilitation of Port Harcourt Refinery and of course Kaduna and Warri.
Yes. So all that should have a very positive impact on the price of fuel.
What about on smuggling, the issue of smuggling? What impact do you expect that will have?
Smuggling, what will happen to smuggling? What will discourage smuggling is if the reality is allowed to play, like we talked on Tuesday. Smuggling will keep happening on the ground, no matter how you stop, if the market is attractive. But when the invisible hand of the market is allowed to determine and things ease out, and we have the reflection of reality in the oil sector and the oil market of Nigeria, on a good day, smugglers will look elsewhere.
But I believe that by the time Dangote Refinery comes on board and then the Port Harcourt Refinery is working, now they're talking about rehabilitating Warri and Kaduna Refinery. If all of these refineries are functioning, then we should be able to produce our petrol in-house, and then we won't be talking about subsidy.
Yes, we won't. Yes, that's why the issue of the removal of the subsidy won't be an issue anymore. And even the foreign exchange bypass of having to import, all these will be out of the question or out of the equation and allow us to have a free flow. And then we can now begin to talk of meeting our domestic need and exporting to earn forex and boost our reserves.
All right, talking about reserves, we just talked about the IMF special drawing rights. And for you, how much of impact will this have on, our reserves, of course, and actually our exchange rate, at this point?
Yes, $3.35 billion is a lot. It's a lot. It's a welcome development. At least IMF, their focus is to address the long-standing reserve need of these member countries. Because of the COVID impact, a lot of things were eroded. Many countries have been struggling. So this special, if you notice, the special drawing rights tended towards very poor, 40% was given to very poor economies, emerging markets, those that are very low income, countries. So the aim of IMF is not just to show these reserves, but to also build resilience and sustainability in economic growth based on what is happening now. They expect those economies to bounce back or to resist, not to just be totally overtaken. So for Nigeria, 3.35 is a lot. Presently, we are even, because of the fuel, the trend in oil price, by end of July, we're able to have an accretion of $160 million for the first time against June's 910 million, drop in reserves. So if you notice, we've started coming to a very fairly, favorable place because of, we get our reserves from oil, and oil had been, trending high in the last few months, and it started even affecting our external reserves. In July, we came out of having a depletion to an accretion. So this 3.35 billion also is an added advantage. It should shore up our external reserve. It should strengthen the Naira too. Because
we saw that yesterday the Naira appreciated at the parallel markets. Then one would wonder, what the CBN did last week, after all, didn't really, when everybody expected that, at the BDCs or at the parallel markets, we're going to see the Naira perhaps hitting
700, 800.
Absolutely.
That's the activities of speculators. And a lot of them went into panic buying, hoping that it will go that way. But CBN, they know what they want to do. When I heard the CBN governor reading out numbers to call if you have an issue in the banks, I knew they meant business. So once people initially tried to process what it meant, and that was why there was that sudden spike a day after. From about 5:05, it went to 5:25. But as people began to see that this is like it's something that's workable, people are getting into the bank. And mind you, it's mainly people that are, these invisibles are the area, like these PTAs, BTAs, medicals, school fees, and people that are legally in need of FX. And then you walk into the bank, you get your documentations, in place, and then you come out with money. That is the target of CBN, to ensure that Nigerians that are in need get it. And now that people are seeing that it's working, the speculation is no more there, and then people are beginning to relax, and that's what's affecting
And it did also
the
help
acquisition.
that the banks also gave assurance that the public will be able to get dollars,
Yes.
and I believe that also
and they are
helped.
working on it. They are trying to educate people. They are trying to, kind of sensitize us on how possible this is. I think it's very, very good for Nigeria, because you notice that this trend has been appreciating, and it will keep appreciating. Now, not to talk of this external reserve coming to play, empowering, strengthening the hand of the government to be able to support, foreign exchange activities in the country.
Right.
All right, let's look at the agri-commodity. And we're seeing here sugar price, global sugar price rising. What are the driving factors there?
Sugar's been plagued by so many things. You know that Brazil is the highest exporter, the number one in the world, with about 32 million, metric tons, But now, there has been an issue. First, they were challenged with lack of containers for exporting. That was the first challenge they had. Initially, sugar crushing season, that's the harvest season, was also delayed due to dryness. The weather was extremely dry in Brazil. So they couldn't crush it was meant to be between October and March. And they will start, they'll be ready to export from April and then begin to, down the year. But it came in late. Then, at the same time, soybean, the harvest was delayed. So soybean, Brazil is also a key exporter of soybean. So at the border now, there's congestion. They are struggling to get it out. The cost of moving a ton of sugar from Brazil to China hit up to about $64. So all these things are affecting the price of sugar. And another thing we have to consider in the face of all these issues is the fact that there is the challenge of the COVID, this strain, this Delta, variant that have been affecting this movement. And the fear in the sugar price is what happens if restrictions are put in place to further worsen what is already existing at the borders. So if the restriction is mounted, it will get worse, because the congestion they are still dealing with and they've not been able to overcome, the lack of containers had also hindered. Even India took an advantage at a time of the Brazilians' challenge. But they too suffered lack of containers in the first half of 2021. So these things are pushing up the price of sugar in the international market.
Nigeria is supposed to also be a player in the sugar production, and it's actually a revenue opportunity for us. But how are we doing, in that space, and also with the sugar master plan? How's it looking?
Presently in Nigeria, it's just three major key people now. It's streamlined to Dangote sugar, Boa sugar, and flour mills.
Right.
So, when it becomes a little bit like monopolistic, it always gives them that power too. But what is happening in the international market is definitely going to affect them. And you know that fast-moving commodity, those commodities that have a very short, shelf life, all these big pastries, confections, and things like drinks, they use sugar a lot. And if it's going to be, costlier to import sugar by reason of what is happening in the international scene, it's going to push up our import bill on sugar. It will affect the price of sugar, and it will affect all these fast-moving commodity, industries in the country.
Now, Nigeria have been with a sugar master plan trying to ensure that we produce enough sugar here. And I think it's also part of the items that were restricted from accessing a foreign exchange. And again, the world is turning their attention to greener energy, looking at ethanol as we produce, which is produced sugar. So one would ask, how can Nigeria actually take advantage of this, particularly looking at the value chain that sugar, gives in terms of production of ethanol?
Yes, I think that efforts should be put by the Nigerian government to increase production of sugar. Support farmers, for instance. Give them subsidies, give them concessions, encourage them to produce sugar. Because you cannot be saying that you want to increase your production and you are importing. And you are supporting imports, you are getting it en masse. If you keep increasing the imports and supporting importation, people will really not sit down and look for a way to actually make it work internally or locally, domestically. If we are out to fully utilize the benefits of what it means to be importers or exporters of sugar, producing sugar in large quantity, then we should give it all it takes. We should earmark projects and programs that will support farmers, that will give them the best type of seedlings and whatever they need, and all the support to strengthen that aspect and ensure that the production increases.
Okay, take us through the domestic commodity price movements and their drivers.
Okay, for the domestic price, there's been a little, due to seasonality and harvest, a little drop. Like tomatoes experienced about 42% drop from 60.
Wow,
from 60,
okay.
Yes, from 60% is about 35 now for a 50 kg bag of tomatoes. And also, you notice some decrease in other things like garri that was on 17%. It dropped by 7% to about 15,700 a bag of garri. The rice is still flat on 27%, 27,000 naira. I mean, flour is still on there's a 7% increase in flour to 16,300 naira too. Then beans too experienced a little drop in price. So because of harvest, harvest has started coming on and people are beginning to see a little relief in the cost, even in the new yam, even though it's still expensive, but not as bad as what it was earlier. So with harvest and the seasonality in place, the price of, the retail price of local commodities had improved a little bit. And this also agrees with the FX price that dropped by about 5.6% in the week on the review.
Okay, let's have your outlook now for global commodities and, of course, oil.
Oil. Okay, I still maintain that oil is driven by demand. It's driven by demand. What we should focus more on is how to handle this COVID Delta variant. Let's not forget that the appreciation in oil price we experienced in the last month was out of economic recovery. It was because economies picked up, economic activities increased. That was why we started witnessing an increase in the oil price, because demand increased due to economic activities. So if this Delta variant of the COVID-19 is not curbed, it might still impact negatively on oil supply and pull down the price further.
All right, thank you very much, Juliet. We do appreciate your time.
Thank you for having me, Jimmy.
Thank you so much.
Thank you, Ladi.
All right, we take a moment. We'll be back.
All right, yesterday we saw marginal gains at the equities market. Let's get more now from Anete Edet. Hello, Anete.
Good morning, Ladi. Yesterday, the stock market is still maintained the, if you might call it bullish, but I'll call it an uptrend, because yesterday we're up by a marginal 0.03%. Of course, that means that the month of August is still taking that green posture, or the positive posture. Take a look at what we have. We're closer to the 39,000 points, which we lost several weeks back. Of course, in the last trading sessions before Wednesday, we had the telecom sectors being the backbone of that of the uptrend that started the first trading week of August. But yesterday we had just not too much of an impressive performance. But albeit, this is what we printed yesterday, which translates to about 5 billion, and then a week to date, as at Wednesday, we've gained so far 198 billion, close to 200 billion naira. Now, take a look at the sectoral performance. Well, it's a mixed kind of a mixed picture there. Banking sector, that's because the likes of Access Bank and Zenith Bank did a little bit of magic there, but their performance was not too impressive on the market's overall value. Of course, the industrial goods sector was also there, Presco, but the profit-taking was much on the oil and gas sector. That's why you saw the market just go not so impressive. And then, of course, if you take a look at the month to date, we're at 1.0%. while year to date, we've managed to reduce the loss to about the minus 3.3%. So we're just hoping that the market will still continue to maintain that positive posture, but you never can tell. The market can just decide to have its own, have its own mind. Of course, that depends on what investors or what's attracting investors or what's scaring investors. Of course, now sectoral performance, oil and gas, like I said, was a major reason why the market fell. Then transactions, total volume of transactions was not too impressive. The total volume there was down by 10.9% in contrast to what we had a previous day. Value was also not too good. Total volume of deals also lesser than what we had on Tuesday. So let's flip over to the fixed income markets. Transactions there was a bit mixed, but of course it still had some reprieve in contrast to what we had on Tuesday. Total number of deals carried out there was 16. And then, of course, the highest there was on the 18th of March 2036 paper, which had about 6 deals valued at 1.8 billion naira. Moving over to the Treasury bills market, of course, another not too much of activity there. The highest there was the 14th of July 2022 paper. And the total number of deals carried out there was is just about 3. So now over to the open market operations, the OMO market. Well, the OMO market, it had the average yield there was not too much, but at the same time, it stayed flat at the short and mid segments. But the highest there was the 31st of August 2021 paper. Over to the central bank's special bills, 31st of August 2021. Yeah, on Tuesday, it had some activity, but as at yesterday, no activity carried out at all. So, well, we just have to keep our eyes open for how it pans out at the close of Thursday's trading, where we expect that there will be an OMO auction. We'll have one of our fixed income market analysts to talk to us about that. So let's move over to the unlisted securities market. It had a bit of reprieve there. 0.58% is what it printed yesterday. It was up in contrast to the last two trading sessions within the week. And then, of course, the volume of transactions there also was in the green. But now, like I said, let's have our fixed income market analyst, Kaya Ewebi, talk to us about the activities at that market. Good morning, and thanks for joining us, Kaya.
Good morning. Thank you for having me.
Okay, so now with the fixed income market, of course, in Tuesday's transactions or in Tuesday's trading, it was not too impressive. Yesterday, it was a bit of a mixture. So can you tell us what happened yesterday and then what to expect at the close of today's trading at the fixed income markets?
Okay, the Treasury bill market traded on a quiet note yesterday with few activities recorded across the curve. We saw increased demand for the long-dated Nigerian Treasury bills paper, but few trades were consummated across the curve. The rate remained largely unchanged in the opening level. We expect that there will be renewed interest on OMO papers today, given the sustained absence of the CBN OMO auction. We expect to see a bit of demand on OMO papers in the market today. We also expect cautious trading in the NCT segment of the market, as the DMO is expected to roll over 1.4 billion at the NCT auction next week across the 3 standard tenors. On the bond segment, the bond market traded on a mixed note yesterday with cycles of demand at the short end of the curve, and we saw more selling interest at the long end of the curve. Day-on-day average yield climbed marginally by about 2 basis points, with the 2049 maturity closing flat at 13.15% on the offer. we expect that investors will remain a bit cautious to see what direction the market takes, especially with the news about the federal government Eurobond issuance program, which is expected to the DMO is expected to close anytime soon.
Okay, so thank you, KF, for that update, and then what to look out for at the fixed income market. So we'll keep our focus on that market. So that's it for today. Today is another trading day at the three, both the unlisted securities market, the equities market, as well as the fixed income market. So we just have to keep expectations in the uptrend.
Could we possibly have an all-green week this week for the equities market?
You just can never tell, because 1 minute you have your optimism, and then, of course, it gets dashed. Then you're more like maybe not too optimistic, and then it just comes with a surprise.
All right, Nita, thank you so much. Thank you so much for that. We'll take another quick break now. When we come back, Business Morning continues. So stay with us.
Disruption, competition, innovation, and performance optimization are the future for organizations aiming for success. Is your organization and its leaders ready for this future? Our Strategic Leadership for Success in an Unknown Tomorrow program will equip leaders with the skills to thrive in this future. Join our University of Cambridge, University of Oxford, and London Business School educated faculties. Professor Paul Griffith of Ashbridge, Ambassador Charles Crawford, and Ambassador Dr. Rachel Aaron on this remarkable program. Leveraging Texam's tested and proven methodology, they'll develop you a distinct capability to consistently generate winning strategies and entrepreneurial culture to thrive. Date, 16th to 19th of August 2021. Venue, Hilton Garden Inn, Birmingham, UK. Cost, £3,300. Covers study materials, accommodations, feeding, group pictures, and certification. £300 discount for the early bird if payment is made before August 1st. For more information, visit www.texam.co.uk or email exec@texam.co.uk.
Okay, let's look at the crypto market. Hey, Ladi, good morning. Bitcoin still ranging there?
Oh, yes, still raging, still finding it hard to break that 40K and actually stay above it. But it's looking green this morning. See Bitcoin at $39,000, up about 3.29% this morning. And major altcoins and the green. And Ethereum is doing really well at $2,600, up about 7%. You still have that Ethereum hard fork coming, and that's today, between today and maybe early hours of tomorrow. We should see that upgrade on Ethereum. We have BNB also in the green, and major altcoins. We'll see the stable coins there in the red, showing that investors are pulling out of that counter and getting into the altcoin market, especially Ethereum. See market cap, they're $1.62 trillion, up about 4.01%. 24-hour volume traded this morning. The total crypto market, $80.96 billion, up about 14.62%. Bitcoin dominance there, 45.50%. And price of Bitcoin, 39K, about 2% this morning. 24-hour volume traded in Bitcoin, $24.42 billion at 8 a.m. this morning. I look at that, the chart, the 1 hour chart there. You see it got rejected, trying to flirt with that 40K range. Got rejected there. And we have that bearish MACD cross, but it's still in bullish territory. RSI is at almost 40 points. Not yet oversold, but it did actually get overbought at this region where it got rejected here. Price of Ethereum doing really well, $2,600, up about 6%. 24-hour volume, Ethereum is beating Bitcoin this morning. It's about $25.54 billion traded in Ethereum this morning. Total top alts by market cap. We have BNB there, up about 2.49% at $331. We have Cardinal, $1.37, up 2%. And we have XRP at 72 cents, up about 1.14%. We have that news about XRP there. We see they are having talks with the SEC, and they've actually been granted access to Binance's records on the SEC securities case. The ongoing case between fintech firm Ripple and U.S. Securities Exchange took another turn this week when the company was granted access to Binance's documents. U.S. Magistrate Judge Sarah Nutburn granted Ripple CEO Brad Garlinghouse's motion to obtain international discovery of Binance records. According to the docket, the approval was made on August 3rd, while a duplicate request was actually denied. Ripple also argues that the SEC cannot regulate XRP as a security because it is a medium of exchange used for international and domestic transactions. In mid-July, Judge Nutburn allowed the firm to depose William Hinman, a former SEC official who stated publicly that Ethereum was not a security. So that drama is still unfolding there with Ripple and the SEC there. And we have top 5 gainers. We have Aave up 15%, VGX $3.30 up 15%. Let's bring in Solomon Amunde now. Hello, Solomon.
Yeah, good morning, Ladi.
Good morning, Solomon. Great to have you. Well, Ethereum London hard fork, we should be getting that upgrade today. And really, Ethereum has come a long way. To think Ethereum was trading at about $7 in late 2016. What does this mean for Ethereum, this upgrade? Has there been any major upgrade like this in the past?
Not really. We haven't had something this significant, especially at a point where we have DeFi making new waves, and we've seen Ethereum transaction fees go past that of Bitcoin. We've seen sometime this year, we had even up to $500 per transaction fees. And it's really, really disturbing for the overall crypto community and the DeFi space. So we are actually waiting for the update. Everyone has been anticipating this update, which would actually set the pace for the transition to proof of stake, which is 2.0, Ethereum 2.0. So it's a major update, and obviously we would expect some form of volatility in the price of Ethereum. And we actually expect this update to bring a whole lot to the ecosystem, especially in terms of transaction fees. So we would see lesser and cheaper transaction fees after this update. Let's say in the next 6 to 10 hours, we should be able to get lesser transaction fees on the Ethereum ecosystem.
All right, so considering Ethereum would become deflationary with this update, do you see this as a sell the news event, or do you think investors will still be holding?
Yeah, it's a positive news for investors, but we can't be so sure that this update will make it completely deflationary. But one thing is for certain, this update will actually decrease the inflation of Ethereum. It will drastically decrease it. Then the full transition to the proof of stake, which is Ethereum 2.0, which should be first quarter of 2022, that would actually make Ethereum more deflationary. So basically, the major thing we are expecting to see after this update is lesser transaction fees.
All right, Solomon. So what categories of crypto are you bullish on right now? I know play to earn has been making waves low-key in the market. What are you bullish on?
I feel after this update and it's successful, and we start seeing lesser transaction fees, the tokens to purchase would be DeFi projects, because then the DeFi projects will be running at full speed, and there won't be much issues again in terms of transaction speed or congestion on the network, since we have the bulk of them running on Ethereum blockchain. So that would really, really help a whole lot on the DeFi space. And also on the NFT space, we experience so much issues in terms of minting NFTs. You get gas fees of up to $200, $100 just to mint on the Ethereum blockchain. But after this update, that should reduce drastically. So I would say the NFT space and the DeFi space, I'll be looking at those projects.
All right, so I need you to look into your crystal ball now, Solomon. Say in 5 years' time, where do you see the price of Ethereum?
Price of Ethereum?
Yes.
The price of Ethereum in 5 years' time should be nothing less than $30,000.
Wow, that's a big one.
Yeah.
All right, Solomon, I'll count you for that one. All right, Solomon, thank you so much. All right, top 5 gainers there. Aave, VGX, Comp, Beta, Torrent, and Uniswap. all in the green, double-digit Uniswaps there, 8.39%. So, Chimmy, that price projection there, it's quite an interesting one.
Well, by then, I guess Bitcoin
wow.
would be 100,000 perhaps.
Or more, who knows?
All right. That's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching. And don't forget to join Business Incorporated at 1:30 for more business updates. Thank you so much for watching. Bye for now.